All right. I will call this evening's Financial Affairs Committee meeting to order. It's 7:30. We'll begin with a roll call, and I won't call everyone's name out, although that is a good mental exercise. Could we start with you, Ms. Hammer?
Present.
Joel Fishbein, present.
David Cohen, present.
Charles Williams, present.
Liam Mulholland, present. Jennifer Lohman, present.
Zachary Epps, present.
And Dan Schultz, present. I believe the first item after roll call is the approval of minutes. Is there a motion?
So moved.
Second.
Second.
Ms. Mulhern, all in favor?
Aye.
That sounded unanimous to me. Mr. Swigert, please take it away.
All right, good evening, everyone. We have a special guest this evening. We have Carl Hogan from BBD. He is our auditor. He's here to present the audit report. We're going to go a little bit out of order so that he can get presented and get going.
If I stand up here, it's a little bad eyesight. Feeling that some of the numbers are really small now. Oh, I definitely.
Would you rather sit up? Would you rather sit up there? So we can
No, I could stand. I don't need to. And it's fine. You don't need to get up. Sure. Oh yeah, I'm positive. I definitely want to go. There's a lot of the numbers in the back, but my name's Carl Hogan, and we're gonna do a short. So, all right, I'm gonna back up a little bit here. So the draft audit is available in its full format, and to spare everybody the pain of going through the whole audit document, I picked out about 10 pages that I think is most important that we can have a discussion regarding the year ended June 30th, 2022. So the game plan is we'll have the full document in its final format to be approved at next week's board meeting. And as we go along here, you can ask me any questions. A lot of these numbers should look familiar to everybody in terms of what's been reported to everybody throughout the year. But this is just kind of a synopsis of, the audit report. And if anybody has any questions, just stop me and I'll try to answer the best I can. So the first thing I'm going to go over the first 3 pages of the audit report, which is the independent auditors report. Really a big, exciting year this year. There's a different auditors report. They changed the whole format. They issued a new auditing standard during the year. The biggest change in the auditors report you're going to see, besides it being not 2 pages, but 2.5 pages now, is that they've moved this opinion paragraph that was kind of buried within the auditors report previously to the top. But I think it's the most important, because basically what this is saying is that the numbers that are being presented in this audit report are fairly presented for the year ended June 30th, 2022. So also exciting for audit, we had a change in accounting principle during the year. I know Josh and Lou are probably really excited about it, but there was a new accounting principle that you change how you're reporting your leases and your financial statements. So basically anything that was considered an operating lease before that we didn't have to record a liability for at those entity-wide financial statements are now being recorded as an asset and an offsetting liability. So any kind of information technology leases you have, any kind of copier leases are now being captured as a capital asset being depreciated in the likewise liability to be consistent with those full accrual statements. I know that's not how you account for things on a budget basis, but that's a new accounting standard that was implemented during the current year. The next major sections of the audit report, this one here, responsibilities of management. And then on the next page here, and the second biggest change is auditors' responsibility for the financial statements. So our responsibilities have never changed, but what they've done here in the auditor's report is they've kind of outlined in these 5 different bullets right here what our main responsibilities are. So previously we just had this paragraph up above and we didn't have these things outlined below. These have always been our responsibilities, but now, with this new auditing standard, it kind of spells it out within the audit report. So as we come down here below, I'm talking about there's some summarized information that we presented in the audit report. You'll kind of see that as I go through it. And then the last sections of the audit report, there's different sections of the audit report. Required supplementary information is basically made up of management's discussion and analysis. So when everybody gets a chance to review the full document, I really encourage everybody to read pages 4 through 15 because of the fact that, if you don't want to read, see we're up page 57 here. I think it's close to 70 pages of audit document. So if I would really encourage everybody to read pages 4 through 15 because they'll give a brief summary of the financial highlights for the year. But the reason why this is broken out here is that we're not giving an opinion on management's discussion and analysis or some of the other required supplementary information. We're just required to make sure that everything's consistent with the rest of the audit report and what's been, disclosed in, particularly in management's discussion and analysis. And then the final section of the audit report, there's supplementary information that we are given an opinion on, and that supplementary information up at the bottom, page 3 there, is the schedule of expenditures of federal awards, and we do give an opinion on that in relation to the whole financial statements. And, that was fairly stated in relation to the full financial statements. And then we have reports in the back to meet our requirements under government standards. So, all right, and this is going to be dated, probably around the date that things are still in draft form. The next page, which I think is the most important part of the audit report. So this page right here is your budgetary comparison schedule for the general fund. It's in the back of the audit report. It might be on, I think it's page 50 or something like that. And the reason why it's in the back of the audit report, this is part of that required supplementary information that it's talked about, is we're not given an opinion. We're only given an opinion on these actual numbers here, but the budgeted amounts, we don't give an opinion on the actual budget amounts. We're only given an opinion on what your actual results were for the year. So, but this is, really critical and important to what the board does. You put out a budget at the beginning of the year, and you want to see how you end up compared to, what was budget. It's been really hard to budget the past couple of years, just because of the fact 1920, you didn't have the last 3 months. Then you put a budget together going into 2021, and none of what you probably assumed going into 2021 actually happened. I think there was kind of an assumption we're going to go back to school. We didn't go back to school. So this is about the first year since, then that you've had kind of a regular year where you put out a budget and you have results. But there are some things that, were a little bit different in terms of that you might not have anticipated. So we're going to start up at the total revenues. $122.6 million were budgeted. Your total revenues came in at $130 million, at $130.8 million. And you can see your biggest variances up in the local source revenues. Within 5%, but if you dig down into that number for the positive variance for local source revenues, you have better than anticipated real estate earned income, and particularly your realty transfer taxes. So I'm seeing this across all the school districts that we audit. We audit, over 30 school districts, and everybody's seeing big windfalls in terms of their local source revenues. And what I'm saying to everybody is, can't really rely on this. We got to continue to conservatively budget going into future budgets, because I would tend to think that that's not going to be continue to happen. So got to look at these as one-time revenues. Your state source revenues, they're almost right on budget, because you know what the state's going to give you on an annual basis based upon the budgets that they pass. And then the federal source revenues, more than anticipated related to that COVID-19 funding that was received. In particular for this year, the ESSER II, and then you'll start spending on the ESSER III coming into this upcoming year. So overall, your revenues were $8.2 million on $122 million anticipated. So as it come down to the expenditures, this is where we're seeing some of the fluctuations. The funny thing is, you had some ups, you had some downs, but at the end of the day, your total expenditures were only $700,000 better than anticipated. So a lot of this regular programs, the amount that's overspent is offset by this positive variance up here. So you had expenditures related to the federal source revenues that are directly reimbursed by those federal source revenues. So that the positive in the revenue is being offset by the negative in the expenditures. And then you have your special programs. So I know this is an area that seems to fluctuate. So you can be very conservative, especially when it comes to special ed. You have kids that come in, but during the current year related to your special ed programs, there was a positive variance in terms of what you anticipated to spend in tuition and contracted services in relation to that function. So you have the positive variance there. Some down below, some ups and some downs. Your student transportation services came in less than was originally budgeted. And then I know down here below, there's another big variance related to your community services. I guess there's a daycare program that was anticipated to be in-house during the budget process, and then you outsourced it going into the year. So you had some savings there. So it's kind of uncanny. I see this a lot. You have a lot of ups, you have a lot of downs, you do some budget transfers, and then you have the $700,000. When you look at that compared to a $120 million budget, I mean, it's pretty minuscule. So, and then if you come down here, there's another section called other financing sources uses. So there wasn't a budget transfer out, but during the year, the board approved a $2 million transfer over to the capital reserve fund that was made during the year that wasn't originally budgeted. Which was related to knowing that those revenue amounts were better than anticipated. So that budget transfers made over kind of segues from the conversation that we just had in the facilities committee. So at the beginning of the year, you budgeted to use almost $500,000 of fund balance. They actually came in $6.5 million better, better your revenues over your expenditures, which is all being driven by those revenues at the top. So your positive variance related to what you anticipated to use, you actually added to your fund balance was about $7 million. So your fund balance at the beginning of the year was 18.7 and ended at $25 million as of June 30th, 2022, which is all being driven once again by that one-time revenues related to taxes and also COVID-19. And like I said, everybody's seeing this across the board. Doesn't matter the school district, the demographics of the school district, et cetera. Everybody seems to be having one-time windfalls, related to local source revenues and being able to use that COVID-19 relief funding for operations or for one-time expenditures related to learning loss, et cetera. So does anybody, I'll kind of open it up to any kind of questions anybody has. It's a good situation to be in.
Thank you very much. Before we go to questions,
Well, I actually have a couple more slides.
we have more.
Oh, yeah,
Great, then do you want to wait until, then, yeah, why don't we wait until you go?
wait till the end. Okay, all right. So I'll be real quick here. This is the same information I just presented on the previous slide without the budgeted information. We also spend a lot of time within the capital projects fund during the current year. There wasn't much activity within your capital projects fund. Here's that $2 million jumping from this column over to this column for the $2 million. There wasn't much in terms of projects that were being done during 2022. But if you look down here at the bottom, your capital projects fund, which is made up of two pieces, your capital reserve fund and your capital projects fund. In the case of Cheltenham here, most of the money that's sitting in there is the capital reserve fund, which is the money that's transferred over from the general fund. If you have bond issuance money, I think there's a little bit left over related to some old projects. I think that's broken down here. $14 million of this is related to capital reserve and about $2 million in change is related to the leftover bond money. So at the end of the day, you have $16.7 million in capital projects money, of which $2 million was added during the current year. Oh, and then one other thing I'm going to talk about too is we really had some good opportunities for refunding opportunities in the current year. I don't anticipate, seeing a lot of those opportunities going into the future. And I think everybody's jumping on those last couple opportunities, but you really saved a lot of money related to, especially one of the issuances related to 2022A, I believe it was. So here's the activity of the money coming in, refunding the old debt, and then we'll kind of go over what those savings were for the year. So, I mean, it's great advantage of that opportunity. I'm not a financial advisor, but I would think that you wouldn't have many more opportunities in the near future related to that. All right, next. So so we just went over the revenues, the expenditures, and this is the balance sheet, your assets and your liabilities, and the excess of your assets over your liabilities being the fund balance that we just talked about. As you can see up at the top, a majority of your assets are made up of liquid investments or cash and investments. Also, there's another amount due from other governments. There's lags with the state of Pennsylvania in terms of your reimbursements from the state. So you may make a retirement payment and then you get reimbursed for half of it. So there's just a timing issue in terms of when you receive some of that money from the state related to not only your state appropriations, but also the federal awards we just talked about. You spend the money and then the state reimburses you. So that's the other big piece of your assets at year end. Liabilities, predominantly your liabilities are current as of year end. The biggest liability being your accrued salaries, payroll withholdings and benefits. There's, amounts or salaries and benefits that are earned prior to June 30th and paid after year end. And that just represents that amount there. And then as you come down below, here's your fund balance. There's that $25 million we were just talking about before right here. So the state of Pennsylvania only allows you to have 8% of your next year's expenditure budget as unassigned fund balance. That would equal 127 million is what your 2022-2023 expenditure budget is. So 8% is the 8.7. So management, and I know Josh has had a conversation with other members of management, and they're recommending that amounts are assigned to get you within the 8% for, I guess, $13 million based upon the conversation you just had before for capital projects, and then also $2 million related to strategic academic planning. So I don't know if you want to, anybody wants to comment on that or at the end.
I have another slide. That was
Okay,
part
all
of
right, all right.
We can talk about it later. We can do it now.
Yeah. So, I'll finish up. So, and there's that $16 million for the capital projects that's restricted. One thing if you keep, I know you moved the $2 million over there. I just want to tell everybody that once you move this money, so this capital projects, you can keep it within general fund. Once it jumps columns from this column to this column, there's a report that management files on an annual basis called an annual financial report. And when you physically transfer the money over, what they call it capital reserve, they won't let you transfer that money back. So enable to give yourself some flexibility in terms of if you don't have to spend this whole $13 million on capital projects, you keep it within the general fund. And as you need it, you could spend it out of the general fund, or then you could move it over to the capital projects fund to spend it for capital projects as needed. But if you move, as soon as you move that money over to the capital reserve, it locks it in, and then PD will not let you move that money back. So, all right, next slide. Also, there's a food service fund and there's an internal service fund. The food service fund is what the food service fund is. It's your cafeteria operations. So during the current year, as everybody knows, during 2021, 2022, all lunch and breakfasts were free. In addition, you also received some additional subsidies related to supply chain assistance, and there was some operating emergency expenditure costs that were given. So school districts across the state, and given the good reimbursement rates that were received on your lunches and your breakfasts during the year, seeing huge windfalls once again in terms of the food service fund. So in the case of Cheltenham, they were kind of running a little low on their net position at year end. Net position increased from only about $100,000, increased by almost $600,000 due to the additional subsidies during the year. So actually $700,000 at year end related to your food service. So like I said, this is across the board everywhere in terms of the amounts of money that was being given, for the supply chain system, the emergency operating costs, and also the higher reimbursement rates related to the Seamless Summer program during the year. So at year end, $700,000 in the food service fund. The internal service fund is just your participation in CPAST. So you're self-insured through CPAST. You have a fund balance within CPAST, and because you don't transfer the risk to the other participants in CPAST, this represents, your activity within that fund related to CPAST. So at year end, within CPAST, you had about a prepaid expense with CPAST of about almost $3 million. In addition, we recorded an estimate for a liability for liabilities that were incurred but not recorded, and that's usually historically has been estimated to be about 3 months of expense. So we recorded that as a liability. So if you take that, equal about almost the 2.9, 2.8. So there wasn't much of a fund balance here at the end of the year. The money is there at CPAST to cover any expenditures that were incurred prior to year end and then paid after year end. So, but shortly thereafter year end, I'm sure you made new premium payments, et cetera. So it's just an estimate in terms of that liability at year end, but that's what that column there is representing. This is just a breakdown of all your debt during the year. Here's all the different issuances that you have. Here's what your annual debt service is going to be, which is $10.6 million on an annual basis. That's kind of wrapped around by your financial advisor. But the thing I wanted to highlight down here are those refunding opportunities that we just talked about. So the one issue, you have the $1 million. The big issue here, almost $4.2 million. So altogether, you were able to save $5 million in future debt service payments by taking advantage of those opportunities. And then finally, the last page here, the schedule of findings and question costs. So there's what, number one, we just talked about, clean, unmodified audit report. There was nothing during our audit that we would consider a material weakness or significant deficiency that would need to be reported to the board. And then also there's a section of our audit now that, the single audit, we have to audit your federal awards. So during the current year, there was excess federal awards that we had to, audit, which required us to audit 2 federal programs during the year. Number one related to that child nutrition cluster we just talked about, because all the money that came in related to that. And the federal government has identified the ESSER funding as higher risk, and we're required to test that as well. So we're testing it, the state's testing it, it's getting tested the heck out of. So if that gives anybody any kind of assurance. And then in terms of anything that would need to be reported in terms of findings related to your financial statements or your federal awards, nothing would need to be reported in this report related to that. So, that's it.
Thank you very much. I was going to say, before we go to questions, since this is, I think, the first audit presentation that some of our board members have received, I wondered if you or Mr. Swiger could give a little bit of context of what is the board's responsibility and what should they be looking out for when, you highlighted a whole bunch of things very effectively, but what's the fiduciary responsibility that our board members should be keeping in mind when they are considering everything you've said and considering what questions to ask?
I mean, I could give the highlights of what we actually do. I mean, it's actually a pretty long process. I mean,
Sure.
I know I'm here for 10, 15 minutes. I'm kind of presenting. I think everything kind of gets a little muddy sometimes because, obviously our primary relationship is with management. You hire management to work with us, et cetera. But at the end of the day, we do work for the school board. And I think, their fiduciary responsibility is more on a monthly basis with the budget, et cetera. This is just kind of a assurance that, what has been reported to you on a monthly basis or annual basis is, accurate in terms of that. And then, so I'm sure what we've reported here tonight, what's been reported in past audits, what's been reported, I know the state auditors are looking at different stuff, et cetera. I think it kind of gives everybody a look at, gives everybody a good feeling about, what's been reported to you. So, I mean, I could go into the audit process.
I think that's, folks are welcome to ask about the audit process as much as you want. I just wanted, especially for the newer members and members of the public who are here.
Yeah, and I think what I like, I mean, since I do work for you, even though, you are allowed to reach out to me directly if you needed to. And if I came across something that I felt, so during the audit process, if something that happens, I would go to Lou, I would call Josh, but if something was of a matter that I needed to come to the board, I would first go to the superintendent and then, and then I would go to the board if need be, after that. But that would be, that rarely happens, or in my experience.
If there was an issue, this opinion wouldn't be clean. It would be a modified opinion. There'd be an accompanying report about what the issues are. Likewise, there could potentially be, even if this is a clean opinion, there could be a separate report with management advisory comments, which I don't believe there aren't any that I've seen. So this is the key report. There's a report very similar to it for the federal programs money that's spent. And both reports were clean, and we both had clean, and credit goes to the business office and Lou. She handled the audit, and she's here during the entirety of the school year.
And I just want to underscore that. Congratulations on a I know it was also a tough, a lot of transitions. So I think it's very notable that it is a clean report. Thank you both. And with that, I'll now turn it over to the board for questions. Mr. Cohen.
Yeah, I just want to also state my appreciation for the audit, and also, Frank, congratulations for having the findings. I actually review audits at work, so I know it's challenging, and I'm very happy as a school board member to see very clean audits. So thank you. Congratulations.
Any other board questions or comments? Ms. Hegway.
I have a question regarding the deferred inflow of resources. I've never seen that on a.
Okay, well, it's a totally governmental term, so it is on the balance sheet. It's actually on the balance sheet. Right, no, it's no.
There it is.
Yeah, right there, right here, right. It's this number right here. So, all right. So you issue property taxes at the beginning of the year, right? And there's people that don't pay their property taxes, right? So if you had it on a full accrual, so say you have a business and you have a receivable, you recognize that revenue right away. But on this basis of accounting called the modified accrual basis of accounting, see this 2785, it kind of matches, they kind of offset each other. So if we didn't offset that 2785 with that 2785, that 2785 would be in your fund balance down below and would be inflating your fund balance, and you would be basing your budget off of a taxes receivable that you don't even know if you're gonna get because they're delinquent taxes receivable. Does that make sense?
It does.
Okay, so we don't want to base a budget off of fund balance that includes an additional amount that may not be what they call available. So if those funds aren't available, you don't want to base your fund balance off that.
The other question I had in terms of food service.
Yep.
Since a lot of that money came from the federal government for sourcing our, food program. I guess the question, for Dr. Scriven is, how does that impact us next year if we wanted to do a breakfast program? Because this is kind of one time, right?
Yeah, we're still doing it. Go ahead, Lou.
Free, right?
Who's got it? Yeah. Do I continue it or do I not?
So are there no funds for next year? For continuing?
Right.
That was a
But would we want to do that internally is the ultimate question.
Correct, yeah.
And I do want to follow on that. There's no guarantees, obviously, but my understanding is the governor's proposal today was for student breakfast and lunch, I think, at no cost. Again, just proposals, so no guarantees.
Yeah. I think it's
I had a follow-up on that. Those are federal funds, 600 and some $1,000. Is that included in the first federal fund, the
Yeah,
at the very top, all the way, first page?
Oh, no, they're totally separate.
It's not included as
It's-
part of. what comes
No,
in.
so the food service fund, you gotta look at the general fund,
Oh,
the
okay.
capital projects from the food service fund, they're like their own separate books for everything,
Got it.
their own assets, their own liabilities, so that is not included, but it is included as part of our single audit. So you'll see in the back of the audit report, something called a schedule of expenditures of federal award, so you'll see that 2 million plus the amount that was on the front page.
Mr. Burdell Williams.
One question for me. First of all, love clean alert reports. So thank you. Ken. On page 7, near the top, there's a line item on investments that has about $19 million on it. So I'm just curious what the extent of that is, and I don't know if that's a question for you.
No, I know, I know exactly what's in there. So the investments, it's not, so you invest, no.
It's
back-
actually down page 7.
So that's mostly, so you invest, or you have a lot of your deposits with Pennsylvania School District Liquid Asset Fund, and they have a lot of investment vehicles. So towards the end of the year, they're able to invest some of the money. So in terms of that, they have what they call a full flex fund, which makes it, it gives you a fixed income kind of rate, but it's very liquid at year end. But at the same time, they usually run about 60 days, 30, 60 days. So at year end, they put that in there to get a higher rate. In addition, they have a CD program that some of that money is also in there as well. So I would say, if you look in your audit report, there's a section that's called investments in the notes. And most of that, I would say almost 17 million is within that full flex program, which is a collateralized investment pool, which is very liquid. It only runs every 30, 60 days and kind of turns over. But in the rest of it, about 2 million is about the CDs.
Is that Pliget or something?
Pistol left.
Is that?
Pistol left. And I think you have a small amount in Pliget too, but the amounts that you have in Pliget are actually in cash because they're considered a cash equivalent, whereas they're not a fixed income.
So all of our investments are extraordinarily conservative. U.S. Treasury.
Well, by state law, you could only have it in certain stuff, so.
But if you look at the investment income line, it did well compared to last year.
Yeah, and it'll even do better this year.
Yeah, that's kind of what I was asking as well, specifically because our 2021 total is non-existent. 18 million in 2022.
Our total income is really low in 2022 as well. But we already have over $1 million interest income with a projection close to $2 million. Trying to push as much into that investment vehicle now. We did a reset while we were pushing that, trying to really capitalize what we think is a temporary situation in interest rate.
Sure.
So just like the financial advisor, they're always in constant contact about, refunding opportunities, same thing with Pistol Life. You know, they're always in constant contact with management in terms of, you know, putting money in a way to, you know, that they can earn the maximum amount, but make sure it's available when it needs to be available.
I appreciate the clarity.
Mr. Epps.
Could you add some more context on the internal service fund? It was CPAS, an acronym, like what?
Yeah, so you're self-insured, so you get your health insurance provided through the Southeastern Pennsylvania Healthcare Trust. So what happens is you pay a monthly fee to them and they pay your claims as they become due. Within CPAS, since we audit CPAS, there is, say 20 school districts, and each school district has its own like line item just like this within it. So if you go in there, you got Abington, you got Cheltenham, you have all these different Montgomery County school districts, and they, kind of use it as a way to come together to get cheaper fees, administrative fees. So if there's more schools involved and they pull their resources together, then they can get cheaper, rates, et cetera. And then you kind of combine all their experience, et cetera, in terms of getting better rates ultimately for all the school districts in Montgomery County. So what this is representing here is the monies that were paid in, the monies that were being paid out. And then what I was saying is that if you looked at the CPAS financial statements, you had, a fund balance with them at about $3 million, but there are claims. So there might be claims that were related to May, June, April that don't come in until after year end. So what management has to do is they have to make an estimate of what those claims are going to be. So historically, the school district has estimated them to be about 3 months of claims, and 3 months of claims is about, exactly what the fund balance is at, CPAS. So that's why this number is almost approximating zero at year end. So.
And where all of those 20 Montgomery County, like that's around the state, every school district in the county is grouped together. That's how it's done.
No, it's not. No, it's not done that. You have to specifically. So if you're a big school district, so if you are Central Bucks or I'm trying to think of another big school like North Penn. No, North Penn's in it. But if you're a real big school district, sometimes it's not economically better for you to be in that and to be by yourself, because sometimes when you're a big school district, you kind of absorb the cost of all the little schools within the consortium, so they might get their own plan. So it's up to each individual district whether to participate in your. So a lot of it is countywide in terms of they have one for each county, but not everybody participates in it. So if you're a small school district, you want to get into it because then all the bigger schools, yeah.
Consortiums are regional.
So Jenkintown's
Hold on
making.
one second.
The consortiums are regional because they match the hospital networks. So,
Got it.
which is why CPAS has Bucks, Montgomery, and some school districts are on their own. Bucksmont plan you may have heard of. That's a joint labor, joint management run plan, and the Chester County, I believe, has their own, and Delva has their own. So it's I think the threshold is about 1,000 lives. If you're a district with that is about 1,000 lives in the plan, you can probably float on your own as your own self-insured entity. We only have about 600, 500, 600, so we're nowhere close. So it benefits us to be part of that group.
Appreciate it.
Mr. Cohen.
So to follow up on that, just for my own knowledge, maybe the board's knowledge, do we have a separate bucket within that consortium?
Yes.
So once this is just the money flowing to the internal service thing going right out to the trust. So it's in and out, this internal service fund. The trust itself holds the money. Once the money goes to the trust, it has to be used for medical insurance purposes for healthcare. So it sits in that trust, and there is a balance because every year, some years we pay in and we have excess money left over because we didn't incur claims because we're self-insured. Other years we lose.
But just to be clear, correct me if I'm wrong, our money is separate, say from Abington's.
Correct.
Okay, thank you.
Yep.
And in the past, we have, when we've accrued money, we've done a premium holiday. I remember, we're able
If you want to take money out, you
So
can.
it's- I'm going to clarify that because of the fact that you have your own separate money, it's not commingled to everybody. It's not a true trust. If it was a true trust, everybody shares everybody's money, and some people win and some people lose. So the reason why this internal service fund is being reported here is you're not transferring the risk of your experience to other school districts, and hence why we have the internal service fund.
And you're benefiting.
Yeah.
But you are benefiting from the administration. That's-
Exactly. Yeah.
And slash negotiation.
Yeah.
Thank you all. Any other questions from the board? Yes.
Are we gonna be provided a copy of this audit for the board meeting?
I mean, it could be provided. I mean, if you feel comfortable in the full draft, then you could.
If you're okay with releasing that draft this morning.
Oh yeah, I'm perfectly fine.
Great, thank you.
And we vote to accept the findings of the audit.
I believe we are approving the audit
Approving.
itself. So
Okay.
once we approve it, it becomes a finalized document.
Accept.
It is accepted. I don't know what oh, I'm sorry, yes.
Anyway.
I meant it.
No, it's in your name on the
I
consent.
did not actually. Meaningful difference.
Okay.
Yeah, I mean, but I think the key takeaway is just as a school board, just in terms of your financial results, and I mean, you're in a good spot. I mean, you have a lot of flexibility in terms of where you are, you know, given your general fund, your capital projects fund, and it just gives you options. Whereas, you know, when you don't have money, you don't have options. You know. As you all know.
No money, no option.
I will just offer a concluding thought, which is to that point with the numbers we're seeing are phenomenal. And in addition to being clean, I wanted to acknowledge just I know some of them are one-time and circumstantial, but it's also one-time circumstantial plus a whole lot of work over this administration and previous that kind of has led to this point where we are realizing meaningful surpluses. And I'm proud of this board and proud of you all, and 3 cheers. Yeah, exactly. That's all good. Exactly. So, and I think we might have some, I think, Schweiger, you're gonna get into this, but we will have some conversations or decisions to make around some of that $25 million.
And just to add to, I mean, like I said, we audit a lot of school districts, and, you know, it's great to be in this opportunity because not everybody has that. You kind of see it in terms of, there's some school districts, they just don't have any kids suffer at that point in time. So this gives you an opportunity not only to, you know, it's just saying may not be capital projects, but be able to provide more opportunities to students, et cetera. Because, you know, it's heartbreaking when you go to some places and some kids have it and the school district next door has it. So.
Capital balance page, that was a new number.
16.
Where is it?
Yep, 16 million.
60 million.
Yeah.
Is there, so any questions from the public? That's the next thing.
No hands raised.
All right. Seeing none, I guess, I don't think we're ready. I think there's another agenda item, correct?
Good.
But thank you so
Yeah,
much.
thank you.
Thank you so much.
In transition, I've got to say as well, your energy. Probably have the best energy as an auditor.
I literally do this every night.
Yes.
Can't tell.
Everybody has the same story. It seems.
Yeah.
Would you like a good?
Thank you. Why don't we eat dinner when we get home? I'll get in
Waiting for Ms. Henry to come back. Or, I think we could probably continue, just
Sure.
unless she indicated she'd be fast, but
She said she'd be right back.
then we. Sounds.
Let's talk about CCAC.
Yeah. I feel like I should clarify for the record that while the numbers are great, it doesn't mean that we can abandon our dedication to continuing to be efficient and effective.
So much of it's driven by those federal funds.
Yeah.
It is.
Can't,
Which is a lot
Yeah,
of
right.
money at one time.
It is what it is.
right,
So we'll
Yeah.
pay that.
Exactly.
that's already.
The federal money, and Dr. Smith is doing a great job of taking that federal money and not using it to supplant every year structural expenditures. So when it goes away, it's not.
Yeah,
Right.
Philadelphia's great to support it.
But that's the term. We're not gonna drop off a cliff.
Yeah.
Easy anyway.
start, it's hard not.
Building 21.
Yeah.
I know somebody who teaches, there's actually.
So we're kind of like, I'll quickly
Oh,
go
sorry.
through. Sorry. I'll quickly go through the rest of the agenda. So as always, I present a month-to-date balance sheet and statement of changes in net assets. Again, highlighting our increase in cash. These statements are essentially reported on a cash basis. So anytime you see an increase in cash, that's a good sign that we're headed towards another surplus, unless there's a large timing issue. There actually is a large timing issue in this case, but it's in the positive, it's in our favor. If you look at expenditures, you can see that on the revenue side, we are showing a $5 million increase over the prior year. Let me zoom in on this. And on the expenditure side, we are running $4.8 million hotter, so to speak, than last year. But in reality, that's debt service. So that was a large $5 million debt service payment. So if you look at year to year, our expenditures are almost approximating what they were at this same time last year, which is a good sign that we're on the right track. And breaking that 74 versus $69 million into its pieces, you can see down here the debt service piece, $5.4 million. I'm guessing last year we must have paid it in early March rather than late February. On the state side, we're still doing very well on our local revenues and our local source revenues. This is primarily real estate taxes, but also $1.1 million. This $2.2 million is interest income, which was almost non-existent at this time last year. I think the earning was 0.07% last February, and we're already up to 4.5% in earnings on most of our balances. So quite the sizable jump. On the federal side, additional ESSER money coming in. This is just timing of ESSER money in and out. And on the state money, I think the state has been very flush with cash lately, so they've been gracious enough to push out our subsidies sooner than they have in prior years. So
that's just timing, that's not more money.
That's pure. They did give us an additional $500,000 approximately. Timing. This is in the old format, as presented in the past. And this is our chart that we look at every month. You can see this, there's this jump here, that's one debt service payment. And you can see here we have a slight change in trajectory. That's another debt service payment. And then when we look at where we're headed the rest of the year, it'll probably level off again with another blip for that last interest piece of our debt service. So hopefully coming in below this 127, and we are well on track to exceed 127 already. Our real estate tax season is closed. We know what the collections are. There's another strong year for real estate tax collections. So again, we should be exceeding that number. Carl talked about fund balance categories and showed that we took the additional money in our fund balance and we put it in the assigned category. So I thought it worthwhile just to briefly discuss what the general fund balance categories are. Non-spendable, of course, is prepaid expenses and inventory stuff that isn't cash, it isn't liquid cash, it's an asset. Restricted are items that are restricted by law. So when we move items into the capital projects fund, we're restricting that money for capital projects by law. So you saw all that money sitting in the restricted section. Committed monies are monies that are committed by action of the board. So if you looked at last year, the board physically committed certain monies to capital projects and towards the budget. Assigned is in a management administrative designation. It is the loosest designation you can give to fund balance, which means when the money's moved there, it can easily be moved into other categories. So we opted for the assignment of money because there's a lot of decisions to be made about what to do. And so there's a lot of breathing room flexibility to make these decisions. And unassigned obviously means it's just in the bank account used for whatever purpose we so desire.
Quick question. So in terms of committed and assigned, are things moving from those categories or?
So you'll see on the board action, we're just switching things out of committed last year through the board action and putting it inside.
And which one of those is capital? Well, because you said capital.
So you could physically transfer the money into the capital reserve fund and you would restrict it. You could do by board action, restricted for capital purposes, which would make it a committed for capital purposes. Or you can leave it as a management designation, which is assigned for capital purposes. So it would all be the same. It's just about the method in which the money is designated for that purpose.
And once it's restricted, we're not able to do anything else with that.
It is restricted to that specific.
Which would mean capital, which is
Correct.
pretty broad. Could
Yes,
be
it's very.
HVAC or it could be a new building.
It is very broad.
Okay.
Now, for clarification, and but you can have capital assigned in addition to capital restricted, correct?
The restricted piece is what we've physically moved to this whole separate bank. account.
Understood. I just want to clarify, I believe in the audit, there's under assigned, there is a capital subsection, and under restricted, there's also a capital subsection. So it is not the case that capital equals restricted, correct?
In this,
In this.
when it's moved to that fund, yes.
But once it's moved, it can be restricted. I just wanted to clarify. Thank you.
So other items for board approval, we are down to technically two finalists for the architect to assist us in our capital plan going forward. The essential role of the architect is to take the ideas of management about what they want to do going forward and assist with the cost estimation, because the architectural firms we interviewed, are actively involved in bidding out and running projects across the Delaware Valley. So they have the most up-to-date numbers and they are familiar with the most up-to-date trends on construction and building. That's what they bring to the table. They also bring a community approach in terms of involving the community, involving the students, and involving the teachers of the district to make those decisions going forward. So there will be a recommendation hopefully by next week on which firm to move forward with. And the only other item I have recommended for board approval is we have another reverse tax appeal case and we need another appraisal done. So there's a $4,000 appraisal contract for approval. Any questions on any of the items presented?
Mr. Cohen.
For the reverse appraisal, can that be shared and an update by email about what property it's for?
Sure.
Okay, thank you.
Any other questions? One, was that a hand?
Yeah,
Mr.
I
Williams.
was forgetting my question. I didn't write it down. That was a mistake, but now I remember. Took me a second. That was a slow hand raise. The question, and I think I had the question at the last financial affairs meeting and couldn't quite formulate what I was asking, but in terms of our budget allocations for transportation related to athletics, is that captured in our line item as an expenditure for transportation because it's part of our contract, or is that a part of those student activities? Or
We've been budgeting for it in student activities. I would like to budget for it in the transportation line item. I think that's going forward. Because obviously that piece of the budget is not factored into our charge to tuition because it's excluded. So.
yeah, I was just curious because just looking at the projection for I think next year's budget, it was like $1.5 million, and I was just curious for student activities if that's including transportation, I would expect the cost to be pretty high because we're driving kids all over the place, right? But and using buses to do that. But if not, I was just kind of curious about just the line item in particular. What was that particular budget item?
And student activities.
Yeah.
Most of the student activities is coach pay.
Coach Bank.
Coach and helper pay for athletic events. And student activity events as well.
Okay. Thank you.
So Mr. Epson and Ms. Haywood, I don't know who was first. So Ms. Haywood, you can go first.
For the feasibility study and the architects that we're going to be using, as a result of their work, are they gonna be coming back to us with recommendations on our buildings? Recommendations on AP and here? What are we kind of expecting after that 3 to 5 month?
So what we'd expect after that timeline is a well thought out and well researched option of plans going forward. And it's several plans that are straightforward in nature, a little more aggressive or risky, a little more flexible in terms of cost. I envision this as making providing one of several options for the board to take in terms of what they want to do with the facility choices going forward. Tying that number to enrollment, tying that number to financial realities of the district, and trying to piece it all together in one package. Something that we can use for many years to come and be able to rely on.
Okay.
I just have a question, not related to the presentation, but related to, I guess, a contract that we're voting for. Would there be another setting other than this to ask about
Which contract?
with hostels, rehabilitation?
That is, I believe it's a special ed or a curriculum contract. I'd have to look into it to see what it is.
It is, but would this be a good setting just to ask a question about even like, I don't think, my assumption is no.
Right.
Okay.
It is no.
Yeah.
Email it.
I was gonna
Email it
say, I
to
could
the
take your question.
Thank you for the meta question, though.
Yeah, I wanted to make sure before I threw it out there.
I just wanted to clarify 2 things about the feasibility study. First off, I'm not sure the full board was aware that there was a subset of the board. Mr. Combs, Fidel Williams, and I had an opportunity to hear from the finalists. So there has been some board input in this process is the point. And then also, I guess, a question related to Ms. Haywood's question, the final outcome of the feasibility study would be a report, correct, like a written report with those recommendations that would become maybe the bedrock of what that 20-year plan that's been discussed would become or be, correct?
Yeah, so it was the facility committee and the finance committee.
Yes.
Those are the
Right,
board members.
Ms. Henry was unavailable that evening and put it in their request. So, the only thing I would ask, and this could be in a board update, but just because we are in the budget process, but we don't have a slide related to the timeline, and I forgot to mention it, or didn't think of it until tonight, it might be beneficial to just update the board what the timeline is going to be in terms of key dates related to the budget process. And that could just be a brief board update, or verbal now, or both. But what is the next key date that this committee should be aware of?
So early May, we have to advertise the proposed final budget for public inspection, and then before June 30th, we have to approve the final budget. Before we advertise the proposed final budget, I'll have an updated budget from the preliminary budget at the finance committee, which would be April,
In April.
to take a look at.
Okay, thank you very much. Are there any questions from the public? Seeing none, I think that was our final item. There's a motion to adjourn.
So moved.
Second. Thank you. All in favor?
Aye.
Meeting's adjourned.